Good evening. This is the Elliott wave update for the S&P 500 for Sunday, December 19th, 2021. On Friday, the S&P did come down, break slightly below that 4696 level, reaching 4590 before turning and moving strongly back up above that level. Then, in today's Globex session, as it began, the market has now drifted far enough below where I am negating the upside potential to move up to new highs for right now, and believe that the market now will continue to move lower to finish what I've now labeled as a beginning stages of a C wave, a minor C wave down. So what I've done is that I've moved, let me just jump out to the 4-hour so that we can see it clearly. Slow computer. Let's try that again. You can see that I've switched back the 3, the minor 3, the minor 4, which had been moved over. The minor 3 was here. This was being labeled minor 4. And then we believed at the time that we were in a minor fifth wave, which would take us to new all-time highs. In fact, the S&P did make new all-time highs last week on Thursday, got itself to 47.43, and then proceeded to decline. So that kept alive potential that the market would continue to hold and that we'd still get a 1 and a 2 and then a break higher. But that 1 couldn't, that wave 2, as it was being counted, could not break below 45.98, 45.96. It did that on Friday. And the recovery back kept alive because I could have switched over to a line chart, and the line chart would have showed that it was shown the extreme, but the close, on a closing basis, it kept the count alive. But today, the market now has drifted back down below that level and has actually put in a close on the hourly chart below that level. We are rallying a little bit higher now, but still, that was enough to switch the count and to basically negate that upside for now. So again, what we've done is moved the 3 and the 4 back to the previous position. The wave 5 is here. If I go up high enough, I've got a wave 5 in there. And I'm only labeling this as high as the intermediate 5 for right now. But my suspicion and my Elliott experience is telling me that it's very likely the endpoint for the intermediate 5, the primary 5, the cycle 5, and the super cycle wave 3. So again, as I have been all along, and even with the revised count that showed the market had the ability to go to new highs, it did not diminish the fact that it was a finishing move of a very, very long-term bull market advance that would result in a more major decline in the form of a supercycle 4th wave correction. And we'll get into that more as this move actually continues to unfold. But dealing with the immediate future right now, it does appear that we now, instead of being a minor 4th wave here at this low at 44.92, that's 44.92, the market now completed a minor wave A. And that minor wave A will couple up with a minor wave B and then a minor wave C to form an intermediate wave A. So we're taking it degree by degree as this all begins to unfold. Don't forget that what needs to unfold now is not only the correction on a minor degree level, but then an intermediate degree level, and then a primary degree level, and then a cycle degree level. So each one of these moves, even though this one is starting off as an ABC, it is only a intermediate degree A wave. Then we'll get an intermediate degree B wave and an intermediate degree C wave, and that then will become the primary wave A. So this, you now begin to see again, using that Elliott wave are building blocks. Completing on 1 degree just puts the next move up on the next degree, et cetera, et cetera. So if this truly, this point is the completion point for a minor, an intermediate, a primary, a cycle, and a supercycle degree level, there is a lot of correction sitting in front of us, but it will all include strong declines, strong rallies, additional declines, all the way. The B waves that'll be associated with this will feel like we're back into a bull market. But understand that it's all a part of the grand structure that's being laid out. So immediately what's in front of us is we now are going to be counting a C wave down, a minor C wave down. That minor C wave will consist of 5 waves of minute degree. And so far within that, I believe that we have finished minute wave 1 of C and minute wave 2 of C. And now we're beginning to drop in a minute 3rd wave. Now that would suggest that, again, that 5th wave is over. So what I want to do is pull this open because I need to be able to count the 5 waves down to even complete that first first wave. So I think we can have 1 here, 2, and then we get another 1, 2, and 3, and a 4, and a 5. So it's kind of tricky, but again, now we're dropping in 5s and rallying in 3s, which does suggest very strongly that the trend again has changed. And so for the balance, at least of the C wave, we're going to be looking for 5 waves down, 3 wave rallies. So if we're going to count that within this first move, if this is where it completed, 1, 2, let me just count this out. See, this pretty much counts out pretty cleanly to me as a complete 5 down to this level. And that would be the second wave. And now we drop down again. And to a 1, 2, 1, 2, 1, 2, 3, 4, 5 of 3, 4, 1, 2, 3, 4, 5 of 3. So we're dropping. And I am now, even on an hourly basis, can't really confirm the initial 5 down. And so it's going to, I think, get a little bit more ugly, let's say, as this progresses out. So let's take a look. Let me get this chart back open again. What I've now put in are the Fibonacci extensions that should cover the C wave. Remember, the C wave, and I'm going to back out to the 4-hour chart because I really want to explain this clearly so we know what we're confronting. On the 4-hour chart, I will open this up so we can see inside. Why is it doing it like that? There you go. This is the completion point for the intermediate 5th wave. This is where we're starting that corrective process. So wave C on a Fibonacci basis is related to wave A. So wave C, most common in a corrective form, which it is, wave C would be equal to wave A. That comes in at 44.95. But what we're also told by guidelines is that in a corrective structure, the C wave would be necessary for the C wave to take out the low of wave A, which is 44.92. So that lets us know that we probably need to go out to that secondary, most common C wave Fibonacci relationship. And that is that wave C will be 1.618 times the size of wave A. That brings us down to 43.43. So we have additional support for the move at 44.37, which again puts us into a new low below wave A, and then also 4,400. Again, puts us in a new low. But the most common then comes in here. First most common, C equals A. Second, C equals 1.618 of A. Third, C equals 0.618 of 8. That's out. We've exceeded that. That puts us to here and then down into this zone. In fact, the market can just continue to move lower, and we have support coming off in the form of a C wave all the way down to 42.50-ish. As this progresses, I will be able to add additional Fibonacci relationships or Fibonacci levels coming down, and then we'll start lining up to where we have overlap. And that's that overlap which will give greater strength to those levels, that is where the C wave will continue. Again, bear in mind, what I'm counting is 5 waves down from that high at 47.43. And I have to count them down on the hourly chart. Thus far, off to a great start. I think at best, like I said, I could probably put the 1 there and put the 2 here, and now we're dropping in a wave 3. And if that's the case, then this third wave will again pick up the pace to the downside. That's what third waves do. You remember that I discussed this. This was a third wave. Granted, it was going in the opposite direction, but it's the characteristics of that third wave that's important to keep in mind. They accelerate in the direction of that particular trend. This one was still showing the trend is up. We were getting 5 waves up, 3 correction, 5 up, 3 correction, 5 up. That's how that all fits together. So within that context, this third wave was rally, but the strength was totally characteristic of a third wave. So if I had to say that this should now look the same, but going down. So again, if I open this up, we're looking for this, but going down. So even if this is 1 and 2, which I highly doubt, again, because this to me is 1, 2, and then we have a 1, 2, 1, 2. So 1 of 3, if this is 1 and this is 2, and then we start into our third wave from that level, possible. Then I'm going to be looking at 1, 2, or possibly 1, 2. That's also a possibility. So we're subdividing this entire move so far would be wave 1 of 3. This would be wave 2 of 3. So we're dropping in the 3 of 3 move. It should pick up the pace. We're sitting pretty quietly right now because we're waiting now for the Asian markets to come online and start to trade everything that's happened, et cetera, et cetera. So everything starts to factor in. Then it shifts over to Europe. Then it shifts back to the United States. So it could remain quiet for the next several hours until Europe comes online. So, but I would suspect that we are going to continue to move lower. And that being the case, we need to start looking at these support levels. Again, we have 45.69, 45.50, 44.96, and then 44.37, 4400, and then 43.43. And that zone actually goes down to 43.21 to 43.43. That would be the zone. And I do believe that the market does have the power behind it to really begin to slide lower. And it may take until the US reopens tomorrow morning, because it's hard to base things, because Globex on Sunday does not include the stocks. So that's why they're still yellow, because they are not trading. So we get their 24 on the spiders and the Qs, but these got to be open for that to change. So this is just position adjustments. And once Asia markets open, the US is going to trade against what's happening within their own markets, because the thought process being that everything just kind of rolls around the globe. In any case, upside, I do think starts to get limited here. That does not mean that this could be it and they turn and change their minds and flip this thing all over again. Nothing can be ruled out right now. The market has been volatile enough that all that we can do is use the Elliott because of the structure formations, but still use the Elliott and the Fibonacci to just guide us intraday. I always am going to still refer to and yield to what the market actually does. The count, while primary, is actually secondary when we're trading intraday. But here's the bottom line for what this would need to do. Expectations would be for it to really start to kick in and slide lower. Failure to do that and turn it rises with strength and breaks back above 46.20, 46.50, heading up back towards that 4,700 level. That again will likely start to negate stronger downside for now, possibly put the C wave complete. Now, granted, we still need that extra low below the A wave, but we've already discussed that it's not the one I want this one. The market is the market. Now, while I am looking for this break below here, this could still be just within this move, still in play. I don't feel that that's the case, but I can't rule anything out anymore because the market is the market and it's been extremely volatile and it's made moves that I'm like, wow, I'm not sure why it's doing that, but here we go. And it's done that twice. It did it here on the Fed announcement that interest rates are going to be raised multiple times next year. That was their response. We love it. But the response then from the UK's exchequer just raised the rate immediately on Thursday to Friday. Boom, they got a reaction. Boom, we reacted along with. Now again, last Friday was an expiration, et cetera, et cetera. So there's a lot in play. They're already turning a little bit negative on the tech stocks. People are taking profits. People are kind of coming in and realizing that this whole rally doesn't look like it's going to continue. Santa maybe already bypassed it and left a lump of coal. Who knows? But I think we need to be prepared for both. So if the market continues to move higher, it has a lot of proving to do. So my thought behind this is that it would need to come in with the same intensity to the upside as that I am expecting on the downside. To break the characteristic of what I expect to happen, it needs to turn and go up. And it needs to not look back. It's just going to make sure that the whole world knows going down ain't going to happen right now. We're moving higher. And that would cause it to break back above this hourly 200, actually, excuse me, the 4-hour 200, the 4, the 200, the 8, the 20, and the 50 all need to be broken and pretty much without much pausing or back and forth. Just go again like we did last week. There was no pausing. There was no second guessing. It just went. Well, that's what it's going to have to do again if the intent remains for the S&P to make new all-time highs above what it did last week. And again, it would likely change how everything is labeled. So for right now, tomorrow, I'm looking for an increase to the downside. I'm looking for the moving averages to now all are in alignment on this hourly chart. Let me open it up. There's the 200, the 50 crossed over, the 20 crossed over, right there. The 8 and the 4. So it's the 4 leading the way and everybody else is pointing hard down. The 20 pointing hard down. The 50 now getting into that pointing hard down position. And the 200 beginning to turn lower. So that helps and supports what I'm expecting. The rally, of course, we just dropped. The low thus far is 45.72. You rally back. If this completed a quick 5, you rally back. But as long as we continue to see 3 waves up and then coming down and breaking a low, that keeps the 5 down in play. If we go up in 5, it'll switch it. Then we're looking for 3 waves down and an additional 5 up. So a lot of what happens is going to be based on what actually is going to print out, what's going to show itself overnight, and then again tomorrow morning. So we have an upside, we have a downside. We have resistance levels, and we have the moving averages. It will all give us the strength and the clues. But again, on the hourly chart, to prove itself that the upside is going to kick in and stay kicked in, it needs to break cleanly above the 20, above the 50, and above the 200 without much delay. Downside, it just continues and kicks in. Once we break 44.96, then we're setting the stage for likely a quick trip down to lower levels. 44.95 from current levels is almost 100 S&P points. That's a pretty big drop. But to be honest with you, I think the market's just been setting itself up to have the plug pulled, open up that stopper, and it just gets a whirlwind. If you've ever watched water go down a drain, it's a whirlwind and it just goes all the way down and it sucks everything down with it. And that's what I think we could get. Again, it's the end of the year. People look for Santa rally. Well, what happens if it's not? What happens if it's a Santa sell-off? Because positions need to be squared. Markets need to, positions need to be changed. What do you want to have on your books coming into the end of the year? Do you need to make those adjustments? So that's what we're looking at. And everybody's going to have in their mind, well, Santa always is a rally. That's the happy part. It's like, no, it doesn't have to be. But please don't misunderstand me. I'm not also saying that that's what it's going to be. We need to be prepared and be able to trade both. So here's what I expect, or what I really want. Volatility. I want that price volatility to remain. And I want it to be strong going in both directions. That makes for good trading in both directions. And when we are watching the price action, when you're watching what's happening on a 1, a 2, a 5, the shorter time frame charts, those moves, we want them, we need them, and we can play them, and we can trade them, and we can make good money. So I'm not going to get married to either side. I'm laying out both sides so that we are prepared. What characteristic I'm looking for? That acceleration down. So corrective moves will be fast, but they won't go at the same speed or depth that the decline would. Contrary to that, if the move is going to be up and is going to be proven as up, those rallies need to be kicked butt, going beyond where we would think they should. How much retracement? So when it starts breaking retracement levels back up with power, then we change and we start playing those as being the stronger waves to catch the larger move. Okay, I'm going to finish there. I do believe that we're in a larger C wave down. That C wave began at 47.43. We may have finished with wave 1 and 2, which means we're in the third wave. If not, maybe we're just completing wave 1 here. And now we're just going to put in ABC and then continue the decline. So much can happen. I believe rallies should be limited. The moving averages are very strong. Everything can change, agreed. Again, keep an eye on the moving averages. If it breaks above the 20, that's more positive for continued rally. If it breaks above the 50, add another layer of positive. If it breaks above the 200, pretty much seal the deal and go. Okay, next update, Monday, 20th of December.